Hello everyone and welcome back to this week's Bitcoin price action analysis. My name is Giuseppe Capò and I am a trader, a certified financial advisor and an author for the Brooks Trading Course website. Thank you for joining us today as we take a look at the monthly and weekly charts of Bitcoin. Here is the monthly chart of IBIT, the iShares Bitcoin ETFs, one of the most largely traded ETFs in the world. And I like to look at this ETF sometimes because it represents genuine institutional participation. This asset was born early in January 2024, and hence this is the full chart, the full historical chart, the full monthly historical chart of Bitcoin. So we can see here from the beginning. It started with a bull breakout and then it consolidated around these levels. More importantly, Bitcoin then did a huge bull breakout and consolidated above the previous range. And it left this high, a gap between this high and this low. This is a sign of strength because buyers were eager to respond at these levels, and hence the test to the breakout point was successful. And this also told us that the market participants were feeling that higher prices from this previous consolidation were fair, that below these levels or below this area was cheap, right? Then the price did a bull breakout of this high and eventually failed, and the price came back within this previous range. Therefore, it didn't find lots of buyers around this level or above these levels. That means that these prices are felt by participants like expensive. However, or not however, but if we can, from this chart, if we can extract this information, we can conclude, or we can have the idea, the general idea, that buying below these prices from here, below this area, is cheap or was perceived at some point cheap, and selling high around this area is expensive. So the fair value of Bitcoin may be in the balance between those prices, between something expensive and something cheap. In trading ranges, that is where the price spent most of its time, 90% of the time, 80 to 90% of the time, the asset class, in this case Bitcoin, is in a trading range. It's in equilibrium because the market always tries to stay in equilibrium and eventually finds a price where both bulls and bears, or people that want to buy and people that want to sell, agree. So where is this price right now? If I have to bet, I will think that is above these levels and below these levels. And normally that's an area with huge overlap, or especially body overlap, I will say. So something like around here should be the area with most where the value, where is the value here? It's around 50 in the IBIT chart. In the spot prices, that will be around $90,000, right? So I believe that Bitcoin first value is around $90,000. Claiming this means that I think that currently the price that is, like in this case, $10 below the fair value, it is cheap. So I think there is an imbalance in the price right now, and that a trader can try to exploit that imbalance. In this case, I think that the imbalance can be played in the long side. Now, that's the general idea, looking at the context, looking at the setup, where this context sets up us, right? But then it comes a shorter term information. And the shorter term information, it doesn't tell something very different, but the truth is that momentum, it's bearish. In the shorter period, let's say this past half year, the momentum has been dominated by sellers, by bears in this case. When sellers they did a bear breakout probably around this bar that was a climax bear bar, they achieved an always in short status. Then the market became probably here always in short, and an inside bar was printed. As you know, inside bars are breakout mode bars, and it's a kind of a bar that more likely than not, or more than any other kind of bar type, is going to fail. Its breakout is going to fail. All right. Therefore, the price traded above and failed, and then traded below, closing around its low. Therefore, that was a bear signal bar for a second leg down. This was a good follow-through, good bear follow-through for this bear reversal. But the problem is that this was already low in this context. So in a context where these prices from this area were perceived as cheap, was not a good area to sell. So even if you can see this particular setup without anything like that on the left, like probably without anything on the left, or too far from to be significant enough, then what you will expect is continuation lower, at least a small leg sideways to down. But instead, the price printed an inside bar with a bull body, and then a bull breakout bar that broke above this inside bar. And now bulls, they wanted to reach these fair value levels around the $50 area, which is the $90,000 area in the spot prices. And now they are failing because this bear reversal bar that is going to close by the time you are reading this, you are watching this video on Sunday. This is recorded on Saturday. Then on Sunday, it's going to close the bar. If it looks like that, it looks like a strong bear reversal bar closing near the low. It will be, again, without the context on the left, without this kind of context on the left, it might look good for selling because it's a failed bull breakout of a breakout mode pattern, and still it may work in the sense that it may provide a scalp down, and hence this kind of reversal is potentially going to test this area lower. Now, not a swing down, because this is a third leg, one leg, two legs, and a third leg. And normally traders, especially our school of traders, they are very concerned joining third legs moves, like joining the continuation of a third leg move, because it has lower probability of success than the second leg, which is the one that we prefer to trade. Now, this is a sell signal bar, but I would not sell it because of what I have said. What about buying this reversal bar, buying a a good bear signal at a buy zone? It might be a good idea. Still, it's not my style of trading. I would prefer to join after a good bull bar. I prefer the price to already show me strength, because if not, it's only my case. If not, you never know how deep it will go, or it can go again. So at least you have like an intention that the price is going in your direction if it reverses, right? Therefore, but still, I would, if I am a bear that I'm able to scale in and to structure a position that is not like I am going to bet all around here, but I could add in my position either below this bull bar or especially this gray area, I would be, I could place limit orders just there, and until the premise proves not valid, it can be good to build a position, at least to test the $50 area. This gray area from here, you can see that there is like this was a micro gap between the high of this bear bar and the low of this bull bar. There is a gap, and it's like anytime that the price revisited this, it's rejected strongly. So it's like it's a price that there is no interest in. There is no interest in this price, and I think that this will be a really nice opportunity for buyers to join in. For traders like myself, I will join after there is some initiative from buyers' side, but I'm sure that there will be traders that they will start to build a position, or even heavily join this move from these levels. Of course, traders doing that are traders that have a very good and strict risk management rules. So if any beginner like tries to trade, most problems that they can encounter is that they are not able to react and manage the position correctly. They are not measuring the risk properly, and they are not sizing their position properly. So trading is an endeavor where it is really important to not only be good in the analysis side and forming scenarios, but it is actually much more critical to be able and flexible to change the estimation of the context as the price moves, and to do the calculations and to have that discipline and attitude to act on that mathematical and risk management decisions, or whatever is in your trading plan. I deviated a bit from the charts, but I love trading concepts, so I hope you appreciate that kind of comments. Well, so even if this can bring us a scalp down, I think it's not the best signal to take. And for the bulls, I believe that it's also not great, at least because what the bull would like is to buy above or buy after a strong bull bar. So if there is no reversal from here and hence some kind of a higher low double bottom, that will be the case where they may step in, and if the price comes down here and it reverses, that will be a really nice signal too. It will be 1 pullback, 2 pullback, 3 parabolic wedge bottom, and then this possible move higher. These are all configuration that might happen. Now, two curious things I bring to you, and that we sometimes don't talk about, sometimes yes, but it is the average bar range calculation. So that means that in an average, during the last 10 months, or 10 bars in this case, the average bar size was like $8.5 here. Translated into the spot prices of Bitcoin is about, if I'm not wrong, $15,000, $15,000 to $17,000 range. And that means that the next month has a potential to go around this size on the low side or on the upside as well. So it's like it can perfectly test the next bar based upon the measure of what an average month moves. It can perfectly test the lows of this bear channel, tight bear channel, or it can perfectly reach actually this $50 level that I have been discussing. All right, so I think it's well, and this is the moving average. I think that is something that I would like to share with you, because it's something that during the master's degree we have discussed, and it's like a cult in institutions to have on monthly chart this moving average of 10 or 12 periods. It doesn't matter much, but it is a moving average followed by institutions on higher time frames. So the rule is to be bullish when the price is above, and to be bearish when the price is below. But they are very used to look at this on the indexes like the S&P 500 or the Nasdaq, that well, they have a tendency to trend because they actually represent not the market itself, but a strategy, right? A strategy of including stocks that has certain market cap, that has certain conditions about their way of doing the business, and they join or they remove stocks that are not going to represent the strength of US or the most strong stocks for the US economy. So anyway, I am telling you that even if it is a moving average that is very used for institutions, that I think that you have to be very flexible into understanding what actually a moving average mean, and how actually a moving average can help you. And I think that in this case, it can help you much more on the use case for an index that like the S&P, that it has a tendency to trend. All right, so now we are going to move down to the weekly chart, but first remember you that the live trading workshop from Macau 2026 still have, if I'm not wrong, spots available. If you want to watch the outstanding traders trading live, It is your opportunity to meet people like Al Brooks, Tom Hogarth, but not only them, but also other great traders like Tim Stout, Price Action Rose, and Louis Wang. And before, again, going to the chart, if you like to learn to trade independently and to take your decisions independently, or anything I have said before about managing risk, managing trades that is critical for your trading success, and not copying or doing whatever whoever tells you what to do, and do this independently is the way to go. So the best trading course you'll find out there is this one. And this is, I'm telling you that I have done many other courses. I have learned from great traders, and I had not found anywhere in the internet anything like the Brooks trading course. You can find the link in the description if you like more information. And finally, the weekly chart. The weekly chart has now printed a 2 legs sideways to up move, and what we have been discussing during these last weeks is that Bitcoin did a bull micro channel of 1, 2, 3, 4, 5, 6 bars, actually 6 bull micro channel, and maybe this was the first one, and then this bear bar broke on the spot, in the spot chart, spot Bitcoin chart. This bar broke below the previous bar, ending the bull micro channel. Now, this bull micro channel, what we have been saying is that this might be the initiative for the bulls to go towards this level, the $50 level here, that is $90,000 in the spot price. And hence, since we expect the market to go there at some point, sooner or later, I have said that this might be the move that it leads us to that price. But we have been also very open to, and we have also discussed that the price was facing a breakout point and this gap. All right. And this is a resistance. This was a resistance. And it played like a resistance, actually. So these areas are normally areas where the price either moves fast or it rejects fast. But the price normally does not spend much time there. It's not the same like when you have like trading ranges, like areas where the price spends a while. But the price in areas where the price does not spend time, it tends to move quickly through it or from it. In this case, we can tell that this was a successful test of the breakout point because it acted as a resistance, and then anyone that wanted to buy around here, they are now trapped in a bad position. Bulls hoped that this will bring a second leg up, but actually, if I were a bull, I will be very worried after 1, 2, and 3 strong or bear bars closing around its low. I actually think that the price is more near testing this apex of the trading range, or the area with a lot of participation of this range, or even the around these lows that they have traded a lot in the past. Now, it is true that anyone that sold here and they were disappointed probably because of such as a bullish trend, so maybe they were not expecting that actually one of the strategies that traders like to apply is in a bear trend, fade a breakout of a bear flag. So now here they are seeing the bull breakout of a bear flag could follow through another bull bar, another bull bar. So they may be, or I will be disappointed as a seller if I have sold here. Therefore, maybe we find that even if the price tests these prices, that there is some kind of rejection because of trapped bears in this area, and hence that can make this move, that can make this higher low, double bottom, that brings the price here. That will be a configuration that can happen. It doesn't have to. The price, as you know, it can go through there. One of the things that I have said right now is that in areas where there have been a lot of participation, not much participation in the past, the price rejects or moves faster. But in this case, when you approach levels where the price is facing previous value, then the price doesn't move like this. So the price normally moves the same, behaves the same way, and starts to just pull back or reverse and have an opposite tendency. So I will not, of course, by telling you this, that means that I will not try to sell on below bars at this point. I would rather prefer to sell higher than lower if I am a seller. So maybe it's a good strategy to sell above a bear bar, especially this one that looks like an outside bar. This bar looks like an outside bar, is an outside bar, I can see, and then an outside bar in the direction of the reversal down. If now the price tests here, maybe the traders will find sellers above this bear bar. Still, then for the bulls, if the bulls can actually reverse up, then and test this level, then that would become a 1, 2, and 3, a wedge top. And even if they look good here, remember, trading range, fair value, there were trap bulls right in the middle of the bulk. Therefore, we know that at least there will be a lot of previous buyers that will sell their longs here. So at least we can assume that there will be some kind of selling pressure. It's like we can look at the order book and see that there are limit order sales there, not from sellers, but from the buyers that want to get out of their bad trades. Therefore, this could create a configuration for at least some sideways to down move. And yeah, I think that I'm not missing anything here. I think I have told you all I have. But if I miss something, or if you have any question about any concept that I have shared with you today, then please leave the comment in the YouTube channel. And you are also invited to join us in Discord, in our community of Brooks Trading Course community. You can find the link in the description as well. And I think that we are going to see us the next week in the Bitcoin Report. Thank you so much for watching, and see you next time.